Okay, so today we're going to talk about something a little tough but really important, the end of life. But this isn't about being morbid. It's about a financial tool. And really, it's about a simple question. How do we make sure our loved ones aren't hit with a financial nightmare when they're already going through the hardest time?
And that brings us to this question, right? What's the real cost of saying goodbye? It's something we all tend to push away, but, facing it can make a world of difference. The emotional cost is, well, it's immeasurable, but there's also a financial one that honestly can catch families completely off guard.
And this really gets to the heart of it. Grief is it's hard enough on its own. The last thing anyone needs on top of that is to worry about money, how to pay for things, how to settle up bills. That's the exact problem we're going to look at a solution for.
All right, so let's dive into that. Section 1, the unspoken final cost. What are these costs we're talking about? Well, they often go way beyond what people expect, and that surprise can create a huge financial shock when a family's already just completely overwhelmed. Yeah, just take a look at this list. It's more than just the funeral, isn't it? We all think about the burial or cremation, sure, but it's all the other stuff that really catches people by surprise. You've got unpaid medical bills, you've got probate and legal fees to settle the estate, even if it's a small one. It all adds up, and it can add up to thousands and thousands of dollars fast. So, what can you do? Well, the good news is there's a specific financial tool designed to tackle this exact problem. It's built to provide a dedicated chunk of money to handle these costs so your family doesn't have to stress about it. And that tool is called Final Expense Insurance. So what is it? Think of it like a small-scale whole life insurance policy. Its entire job, its only job, is to give your family a quick cash payout to cover all those end-of-life costs we just looked at. And here's the key thing. It's designed to be really accessible, especially for seniors or folks with some health issues.
Okay, so how does it actually provide that peace of mind? Well, it has a few core protections built right in. First off, the coverage is for life. It's permanent, as long as you pay the premiums. Second, and this is a big one, your payment is locked in. It will never, ever go up, which is huge if you're on a fixed income. And finally, a lot of these policies don't even require a medical exam. You just answer some health questions, which makes qualifying so much easier. All right, but here's something you really need to know. Not all of these policies are the same. They're not a one-size-fits-all kind of deal. The type you can actually get often comes down to your health. So let's break down the main differences. Okay, check out this table. It breaks things down really clearly. On one end, if you're in pretty good health, you can probably get what's called a level benefit policy. That means you've got full coverage from day one. Perfect. Now, what if you have some health issues, like maybe well-controlled diabetes? You might be offered a graded policy. This just means the payout is partial for the first year or two. And then for folks with more serious health challenges, there are guaranteed issue policies. No health questions asked. The trade-off is there's usually a 2-year waiting period before the full benefit kicks in for anything other than an accident. And this is probably the biggest takeaway for a lot of people. The key advantage is accessibility. I mean, if you've tried to get traditional life insurance before and been turned down because of your health, maybe you have COPD, maybe you're a cancer survivor, this kind of insurance is often the path that's still open. It's designed to give you a way to get coverage and protect your family.
Okay, but is this the only option? Of course not. So how does it really stack up against other ways people try to plan for these costs? Let's do a little side-by-side comparison with some other common financial tools. We'll look at the good and the bad.
So first up, final expense versus term life. People get these confused all the time. Here's the simplest way to think about it. They have totally different jobs. Term life is temporary coverage meant to replace your income for your family for, say, 20 or 30 years. Final expense insurance, it's permanent, and it's designed for one specific, smaller cost, your final expenses. Now, this next one is a really, really critical distinction. Final expense versus a prepaid funeral plan. With a prepaid plan, you're basically locking your money in with one specific funeral home for a set list of services. But what if you move? What if that place goes out of business? Final expense insurance, on the other hand, gives your family cold, hard cash, tax-free. They can use it at any funeral home, anywhere they want. And if there's money left over, it's theirs to use for other bills. That flexibility is everything.
Okay, what about just using a savings account? I mean, that sounds simple, right? But it's risky. That money might not be enough when the time comes, or it could get wiped out by a medical emergency.
Or worse, it could be tied up in probate for months. An insurance policy, though, it pays out the full amount, often within just a few days, even if you only started paying for it a month ago. It's guaranteed money right when it's needed most. All right, let's be real, no product is perfect. And it's important to know the downsides. Because it's easier to qualify for, the cost per dollar of coverage is, it's higher than traditional life insurance. Also, this isn't for paying off huge debts like a mortgage. The policy amounts are smaller. And like we talked about, some policies for certain health conditions will have that waiting period. You really have to see this as a very specific tool for a very specific job. So after looking at all that, the pros, the cons, the comparisons, who is this really for? Let's zero in on the kind of person or situation where this plan makes the most sense. When you see a number like this on the screen, it kind of hits home, doesn't it? $15,000. That's a pretty typical estimate for a standard burial and all those other final expenses. Now, think about it. For a lot of families, coming up with that much cash all at once would be a huge crisis. This is the problem we're trying to solve. So does this sound like you? This might be a really good fit if you're a senior, maybe between 50 and 85, or if you're someone who has some health issues that make other insurance tricky to get. It's also great for families with a modest income who don't have a lot of extra savings. Really, it's for anyone who just wants a simple, straightforward, guaranteed solution so their final wishes don't become a financial headache for their kids. And at the end of the day, the real value here isn't just the money. It's the emotional protection. I love this quote. Grief is intense. Dealing with finances makes it worse. And that's exactly it. This kind of coverage is about preventing that financial panic at what is already the absolute worst possible time for a family. And that really brings us to the final question you should ask yourself. Does your plan, whatever it may be, leave your family with peace of mind or with a pile of problems? Because planning for this isn't really about you. It's one last gift you can give to the people you love. It's about making sure your legacy is one of comfort, not complications. Something to really think about.